We've had 3 consistent weeks of heavy news coming into the market, and this week has been no exception. We've seen gold continue to make new highs and the dollar continue to weaken. My name is Samson Mzera, and welcome to this episode of the Market Watch series, where we'll be talking about the charts, what is happening in the markets, and what to anticipate. So be sure to like, subscribe, and share. In the early hours of Wednesday, we have seen gold edge even higher. We are now at new highs, and it's becoming very difficult to conduct technical analysis, because remember, for technical analysis you need to use price points at the back of the chart or the left of the chart to sort of see entry points or to do analysis on the right side of the chart. So it's becoming a bit difficult. So what we are solely relying on are the fundamentals. And what are the fundamentals? Last week we had the Fed coming in and cutting by a 50 basis point cut, and while this might have signaled that the Fed is finally proactive, it's also showing traders that we are starting to see concerns with regards to the outlook of the US economy and in general the outlook of the global economy. And these concerns are what are piling guys to safer assets or safer investments such as gold. And that's why we have seen gold rally quite a bit, and it's extending that. Yesterday we saw the People's Bank of China coming in to lower their lending rates and also unveiling a stimulus package. And this is in the hopes of stimulating the economy so that we can see that economic activity. So if the biggest economy and the second biggest economy are doing what they can to sort of control the contraction they're experiencing in the economies, then traders are reading into this as there are signs of a global slowdown that these central banks need to address. And that's why we've seen gold rally even further. So if you look at your charts, gold broke 2600, and if you're entering new territories, we'll just be using round numbers. In this case, we're looking at 2600, 2650, and the next level being 2700. So those are the key levels we're looking at, because they are very easy psychological levels for traders. So that's what we'll be observing with gold. If at all we see a pullback on gold, then we will be spotting these round numbers and seeing where gold is likely going to rest. But as things stand at the moment, we do expect the dollar to continue weakening and hence gold to continue strengthening in the coming part of the week or in the rest of the week. In other news, we also saw signs of weakness in the euro economy, with the manufacturing PMIs coming in really low, and now traders are starting to even bet or be more confident that the ECB is going to strongly consider rate cuts in the next 2 meetings. So either we have one big cut in December, or we have gradual cuts from the next meeting, and that might affect and that might limit the gains we are seeing on Euro USD. At the moment, Euro USD is in an uptrend because of a weak dollar. However, that uptrend looks a bit shaky because you're not so sure if the euro is going to continue strengthening against the dollar. So if you look at other pairs for the euro, for example, the euro GBP, we have seen it go to the lowest level since August of 2022. And this is because of that expectation that the euro economy is going to be struggling in the next coming months, and the ECB needs to start cutting interest rates. And if you cut interest rates, then that's when you're going to see a weaker euro. And that is why that is reflecting on the charts. Finally, we have the Australian dollar, which did receive a huge boost from that news that came in from China that they have the stimulus package, especially on the real estate sector. Remember, Australia and New Zealand are big exporters of raw materials to China, and this of course affected them greatly. So we do expect the Australian dollar to remain fairly elevated, in as much as we have seen the inflation coming in lower than expected. This is going to make AUD stay elevated for quite some time. Of all the currencies where you're seeing a lot of weakness, Australian dollar and the New Zealand dollar should be able to hold, at least temporarily in the short term, until more news comes out or more data about the economy comes out. Having said that, thank you for tuning in to this session of the Market Watch series. And if you want to trade any of these assets, remember to go through the description or visit hfm.com. And having said that, see you in the next one.